Hello, folks. Happy Independence Day for those in the US. Today is July the 4th. The market's closed. I have plenty of time. I've done all my updating. I just thought I would take a few minutes before I go about my day. It's about noon Eastern time, and I can relax and take it easy. So I don't know what I'm going to talk about. I'm just going to kind of freewheel it today. So we'll see where it goes. But the market is unstoppable, just continues to go higher, continues to make all-time highs every single day. Watch for the cartoons this week in the newsletter for those that read the newsletter. Should be interesting, funny ones in there. But today is July the 4th. So let's jump in and see what's going on. As always, I am not a financial advisor, so this is for educational purposes only. All right, where to start? First thing I'm going to do is start with a couple of slides. So let me start with this one. Put these up here. Start with this one right here. So this comes from Stock Traders Almanac, which is a great service. I highly recommend. It's not very expensive. If anybody wants to learn about the historical view of trading, usually they can go back 100 years, but they typically go back about 40 years or so. You can see this particular chart is from 1985 for the NASDAQ, and it's showing the Christmas in July. And Christmas in July is definitely on this year. So you can see, I've talked about this before. I actually did a whole session on one of my videos and showed you all the way back to 2017, that the period from the last week of June, which was last week, and to the middle of July is usually a very bullish period. So that's what it looks like right there. We are right on cue. We actually started a little bit earlier than that this year. I don't know if that means we'll end a little earlier too. We'll see. But right now, this is back to 1985. This is historically what the NASDAQ has done. So it's following along with history. History often may not repeat itself, but often rhymes. So keep this in mind. Also keep in mind that we're in a secular bull market, which should continue for the next 4 or 5 years. So even if we do get some downtrends, some pullbacks, they're not going to be severe. They're going to be temporary, and we will continue up to all-time highs. If you look at this chart, you can see where it ends the year. So after the middle of July, it sort of goes sideways for a while. We do have some catalysts coming up, which I'll talk about in a minute. And then at the end, it screams higher. So will we hit 7,000? Well, we'll talk about that. Let's see. Next one is where we are right now. So here we are in July. This is Monday right here. So right now we're in this holiday day period. You can see historically the market kind of goes down, but it didn't do that on the 3rd, the day before. It actually looks like it's going up slightly, but it actually went up quite a bit on the 3rd. So then next week continues to go higher into the middle of the week. So here's the 18th, July 18th, which is a Friday, and that's options expiration day. And it goes higher until then, and then it sort of levels off and goes sideways. So then we have the Fed meeting in July. And I am thinking now that the Fed is going to cut July 30th. And I'll tell you why here in a minute. But they have been saying that they don't want to cut, but more and more Fed governors are talking about a cut. I think they are going to cut. And if they do, that's one of the catalysts that I mentioned. It may just allow the market just to continue going up. We shall see. The next one is a really interesting slide. I've talked about global M2, global liquidity in the past, but here's a chart that I found that shows global liquidity along with the S&P. And the S&P lags global liquidity by about 11 weeks. I had said 10 to 12 weeks. So that's right in the middle, 11 weeks. And here's what the chart looks like with global liquidity and where we are right now. Actually, this is looks like this is from April. So we may already be up here, 68. We didn't make it to 68. We made it up here to almost 63 right here. Oops, sorry about that. Made it almost to 63. It looks like this is April, maybe May. This could be May when this chart was done. I don't know what the date of the chart was, but it's looking like April is here, end of April. So this may be another, a little about a month behind. So right now we're sitting right about probably here. Yeah, it's probably pretty close, 6,300. So we could actually make a run to 6,800. And I said we might hit 7,000 by the end of the year. This chart right here with global liquidity actually implies that just in the next month, next 30 days, we could be up here at 66, 6,800. I'm not so sure that's going to happen, but we could do it by the end of the year for sure. So anyway, I wanted to show you that. Let me jump back over to the website, and I want to show you on the website, show you some charts. Let's see here. Go to the charts page, and we'll look at liquidity over here, the liquidity chart that I created that is based on the dollar, oil, and commodities. So you can see the dollar is continuing to go down. A weaker dollar creates more liquidity in the global market because countries that are denominated in dollars, if the dollar is weakening, then they can refinance their debt with US dollars because it's the reserve currency, which means that they will have more money to spend, increasing global liquidity. Most countries use oil. All countries use oil for energy. So if oil is getting cheaper, then that provides them with more money and improves global liquidity. Now, lately, oil has been spiking up a little bit, but it's pulled back. Now, we'll keep an eye on that. Commodities, too, same kind of thing. 10-year yield has been kind of going sideways in this area right here. All of this contributes to global liquidity. So these are the kind of things that we can watch. So let's take a look. Next thing I want to show you is the unemployment rate, continuing claims, and initial claims. So we had a great unemployment rate right here, came down to 4.1. So the market loved that. That's one of the reasons why the Fed may cut, because actually, if this had gone up, they definitely would have cut. But it's just staying pretty much in this range right now between 4 and 4.2. So the unemployment rate is looking pretty good. Initial claims here. Initial claims are going down. You can see it's actually dropping off a cliff right here. So initial claims are dropping considerably, even though continuing claims are staying up there. But this line right here is the one to watch. So this compares initial claims to continuing claims. So if this is moving higher, that means continuing claims are increasing faster than initial claims. But initial claims are dropping. So this line should start to come back down again. So that's one reason why the Fed, I think, will cut. The economy is still strong. There's lots of employment. There's not really any issues right there. The next thing I'll look at is CPI. CPI headlines coming out the week after next. And right here, this is the July report, and you can see there's a decrease in the CPI, which usually implies an increase in inflation. And that could happen. We could get an increase in inflation in this next report. It should be expected. I think the Fed is expecting it. So that's the reason that they haven't been cutting. And the reason they wanted to wait till September, too, by the way, because they know that inflation is going to look like it's coming back again. Now, this CPI report comes in before the Fed meeting. So this could have a big influence on whether the Fed cuts or not. And that could change my opinion of whether they'll cut. But right now, I would say they will cut by 25 basis points in July. You can see here it's gone from 3 in February to 2.4 in the June report. And then we've got the July report coming up. So CPI, I think inflation may look like it's going back up, but look what happens after that. All these big numbers that drop off every time a big one drops off, especially through this period here. So that's going to be, let's see, August, September, October. So November, December, January, February, inflation is going to look like it's dropping off a cliff. That is going to contribute to the market heading higher at the end of the year. The other one I want to show you is commodities. And this is really interesting. So commodities, this one here, DBC, these are all these commodities. So it's a combination of oil, gas, diesel, gold, silver, soybeans, food products, metals, everything combined together is the DBC. Yes, it is up for this month here. The CPI will be reported. Another reason why inflation will look like it's coming back again. But look what it has done. It went all the way up here by the middle of the month, and it's pulling back dramatically since then. Copper is still heading higher. Copper is a metal that's used in industrial components. So if copper is going higher, usually that means the economies, worldwide economies, are doing really well. And copper is heading higher, so the economies are still doing well. DBA is food. These are all these components here. So food is coming down. It's actually lower than it started the month. So that should help the inflation report. CRB are these. This is agriculture, energy, and metals, all of these combined. That one is slightly higher, but look how it's spiked in the middle of the month, and now it's dropping off a cliff right now. And then finally, oil and gas down here, same thing. They spiked dramatically in the middle of the month, and now they're dropping off a cliff. They're still higher than the beginning of the month, though. So even though these things are dropping, they are still higher, and that's what this report will reflect just for the month. So the report will reflect these commodities. It will look like commodities are going up. The base effect will make it look like inflation is going up, and I think we'll probably get a hot inflation report, which could cause the Fed to actually raise rates, but I don't think they will, because the Fed knows what's coming. They know what happens here. This is not something that's hidden or special or some important information that nobody else knows. The Fed knows this too. So the Fed knows that inflation is going to look like it's spiking in the next report, but then after that, it'll fall off a cliff. So keep that in mind. All right, what next? What should we talk about next? I want to show you the things that I updated this week, since I've done all the updates now. I have today to do it. Down here on the home page, I have updated the secular bull and bear market chart. You can see right over here, secular bulls usually last 18 to 20 years. Secular bears last about 12. The reds and green show you each of them. So here's the secular bear, which lasted from 2001 to 2013 officially. Really, the rally started in 2009. That was the bottom, but it didn't officially break out of these tops until 2013. So you could take the start from either one of those dates, 2009 or 2013. That puts the secular bull till somewhere around 2029 to 2033, somewhere in that neighborhood. It's come down back over here, the 1987 crash. It came all the way down right to this 200-week moving average line, but did not close below it. And then continued higher, and then finally went down over here. We went into the bear market right now. Here's COVID. Actually went below it. This is a monthly chart, so it went below it, but never closed below it. For COVID, this one here is 2018, the last tariff war, last trade war that we had. This is the 2022 bear market we had right here. This is our most recent downtrend that we had that seemed pretty scary, but over here you'll actually see it never even touched the 200-week moving average and then bounced all the way back up. This is a 1-month chart. So this red bar went all the way down here and went all the way back up before the end of the month. The next one's a blue bar, and the next two are green bars. And we are now at all-time highs. So because secular bull markets act like this, whenever there is a pullback or a cyclical bear market, it will recover and it will go back to new highs, and we will continue to go up. The only thing concerning me about this right now is that there is a negative divergence on the RSI up here and on the MACD right here. So the price is making new highs while the momentum is making new lows. So it's making new highs on fewer and fewer buyers or less momentum. So if this line right here where we're at right now, just getting up to 70, if it actually blasts through that line, that will be very positive. That will mean we have much longer to run in the secular bull market. Same thing up here. You can see the MACD line started to come down with this big sell-off in February, and now it's starting to move back up again. So this is July 3rd. I update this every week. If you want to know what the status, where we are with the secular bull market, for those that are very long-term holders, you don't have to worry about anything until this changes. But when it changes, in secular bear markets, you will make no money. If you get in at the top in the beginning, and by the end, 12 years later, you will have made no money if you're a long-term holder. So that's why it's important to understand these. All right, next thing I want to show you is back on the charts page. Let me bring this in a little bit. Index charts. You can see this is the John Carter squeeze. We still are not light blue yet. So the momentum bars are still going down each month. And you might say, well, how can that be when we're hitting all-time highs? Well, number one, because it's monthly. And number two, because even though we're hitting all-time highs, momentum has not increased enough to be higher than the previous month. Now, we are just beginning July. So if we do get that rally, this very likely could turn into a light blue bar by the end of the month. Again, this is something I update every week, so you'll be able to see it. You can see last week, you can see that it dropped, it's lower. So for this to be light blue, this one here has to be higher than last week. But it's getting there. It's almost flattening out right now. You can see back over here during the 2022 bear market, this thing came down dramatically. It kept on falling. And in fact, it fell more and more every month. So this is the same place we were back then, and this is where we are now. So this could be it. This could be it for that downtrend. We could actually be starting to move higher from here. We'll see. We'll keep watching it. Down below are monthly charts of these are the indexes, and these are ranked by relative strength. So the strongest is in the upper left, and the weakest is in the lower right. So you can see the S&P, the Dow, and the Russell 2000, interestingly, are the three strongest. The Russell was actually down here a few weeks ago. So the Russell is making quite a bit of headway. You can see it continues to move up right there on a monthly basis. Bitcoin, NASDAQ 100, Bitcoin, and gold are in the bottom. And then if we look at the aggressive sectors, you can click on that little button and see the same kind of chart with the aggressives. Here's technology, industrials, and financials are in the top three this week as of July 3rd. And you can see they're all moving higher, although financials has not got a green bar yet. And communication services and discretionary are the weaker of just the aggressive sectors. The defensive sectors, on the other hand, here we have materials, energy, and staples are the three strongest. This is based on relative strength. And utilities, healthcare, and real estate are the weakest. And you can see, you just look at the charts on these. The only one that has a green bar, actually the energy, I think, might have a little one, but materials, which is where gold is, the only one with a green bar. And then if you want to look at all of these together to see which one is the strongest. Well, that's interesting. There we go. I just refreshed the screen for those that might have seen that on their own. I'm probably using up a lot of memory because I've been doing a lot of work on here today. So this is what all of them together look like. And again, these are sorted by relative strength. So the strongest of all of these is technology, followed by the S&P, industrials, and financials. The weakest down here is gold, then real estate, healthcare, utilities. Bitcoin is kind of in the middle right here. But all of the defensive sectors are at the bottom. and all of the aggressive sectors and indexes are at the top. So that is a very bullish market. You can see everything is continuing to go up. There's the Russell right there. Actually, it's number 5 out of 16. There's 16 of them on here. So the Russell continues to move up and might even move up to the top tier next week. So that's what those look like. You can look at these. These are updated again every week. You can see the date right there. Just come to the charts page and you'll be able to find those. All right. Let's look at the portfolios page and see what the market timing system looks like. For subscribers that are following this, you can use it for your 401k. It's based on the weekly. It's meant as a long-term strategy for getting into the market. It's basically trend following. So when I say market timing, you will never catch the top and you will never catch the bottom. It's important to understand that. However, if you can catch 80% of the move in between, that's what trend following is. So this is a way to do that. And all you have to do is come here once a day, maybe after the close. I usually update this by 4:30 or so, after the market's closed, and just see whether this has changed to cash. As soon as that changes to cash, then you get out. You move out of whatever fund you're in. You can use the S&P, you can use the NDX, the NASDAQ, you can use inverse, you can use one-time long or one-time inverse funds. So if you're using the long, you'd use triple Q or SPY. If you want to triple up, you can use TQQQ. This over here shows your returns for doubles and triples, and these are the symbols. These are ETFs, so they act just like stocks. This shows you what those look like. And these are the returns ever since these dates. So on the weekly side, it started on May 5th. On the daily side, it started on April 25th. They're up 11 and 13% respectively. And down here, if you were doing the 3x leveraged, then you'd be up 33% or 41%. This is the return ever since November 3rd of 23, when I really started this whole process. So that's what your returns would look like if you had just followed this, and it's just very simple, easy. The first time it went bullish, it was about a year and 3 months that this weekly one stayed long. So that was enough time to get long-term capital gains as well. But you do have some downtrends that you have to live through with the weekly one. If you don't like to live through those, you can use the daily and trade in and out, but you usually won't have long-term capital gains as a result of that. Right over here are the actual charts that are used. The VTI is just the base for it. You don't have to trade the VTI. You can trade, again, any of these ETFs down here. I actually show you a comparison of the 3x relative charts. So if you want to see what the long version versus the short version looks like, you can just click right there. And now you can see, here's the TQQQ, the 3x version. So when I first gave the signal was right here, it was at about 60, and now it's at about 85. So that's in about 2 months. So that's pretty nice return for that period. Here's the inverse, the 3x inverse. You can see that's just gone down, so you don't want to be in that. However, when the market falls, like it did back here, this is the Qs. So this is the NASDAQ, this gray line. So when the market is falling, you would get into the SQQQ and you actually make money even as the market goes down. But we are in a secular bull market, so you have to be careful about shorting anything right now. It's always better to be on the long side. How long will this last? Well, that's a good question. Let's actually go over here and take a look at the charts themselves. I'll do that on the market bias page. The market bias actually shows you what the overall trend of the market looks like. Right now, it's continuing to go up. In fact, it's almost a 45-degree that you can see the trend line back here, almost a 45-degree angle, and it just continues to go higher. So if we look at the S&P, what we'll see is it's up here. It's almost at the expected move. I haven't changed this yet. That's one thing I have not updated. So should have done that before starting this, but I will update this today. For those that are subscribers, you can look at this chart later. But See the big gap up? Look at over here. Just continue to go higher. The day before on Thursday, Wednesday. Yesterday was a half day too, by the way. So Wednesday it opened and closed near the high. The next day it gapped up, opened and closed near the high. So that is very, very strong, very, very bullish. It's almost parabolic, which that does not continue indefinitely. There will be a correction. There will be a pullback at some point. Could be down here to the 21-day, could be back to this, either of these support lines right here at 5150. Today, right now, we're at about 6280, so pretty close to 6300. So we'll see, but this does not continue like this. And to highlight that, let me show you on, I'm going to actually use, I'll go to a new one right here and show you the S&P. SPX. So that's what it looks like. This is my default chart right here. If I look at my Keltner channels, which I talked about, the ATR and Keltner the other day, actually it's even better on here. Look at that. So notice this one up here, the green one's in between. Get back to this one. So you can see it better here. The green is 1 times the average range. So the key line is the 21-day moving average, which is the blue one here. So above this to the green line is what it normally trades in 1 day. From there to the bottom is what it normally trades to the downside in 1 day. So that is called the ATR, the average true range. The blue is 2 times the average range, and the red is 3 times the average range. So when it gets above the red, that is an extreme level. It usually does not stay there very long. You can see it got to the extreme down here. It went below it 3 times before bouncing back considerably. Big, huge bounce back right there, in fact. We are now above the 3x. So it could stay there, doesn't have to reverse immediately, but it does not stay there very long. So I'm not saying it's going to crash. I'm not saying it's going down next week. I'm not saying that Christmas in July will end. We still have another week or so for that, and this could stay extended. However, this will not stay up there. It will eventually revert to the mean, which is the 21 down here at about 6,100, a little below 6,100. So I'm just pointing that out as a cautionary measure. It's good to understand these things and to know where the market is right now. So we'll see what happens next week, but things are very, very extended right now. All right, let's go back over here, and what else did I update? So on the market bias page, I also updated these down here. These are you can see 7.3 was updated. These are the year-to-date large cap gainers and large cap losers. So over here, here's the gainers. Palantir is number 3. Interestingly, Zscaler is made it up to number 2 now, year-to-date. So SMCI is on there. What else? GE, Uber's is on there. Netflix, Micron is on there. CrowdStrike, all of these, DoorDash. Those are the top 20 year-to-date large cap gainers. And the losers over here, Trade Desk has been up here for quite a while. Deckers, Enphase, Lululemon. Here's United Healthcare. We'll get that in a minute. Moderna is a loser. Marvell. What else we got? All of those. So you can look at these. These get updated once a week as well. But good to just take a look and see what's going on, especially if you're interested in one of these. If you see it on the losers list, that could mean it's bottoming. Maybe it's going to go up. On these mid and small and mid caps over here, you'll see all of these in the top 10 list as well. There's HIMS. HIMS is actually moving down the list right now. There's Celsius down here, CRS, US Steel, Next Tracker. These are all Mr. Cooper, all in the top 20 and the bottom 20 over here. I don't really recognize too many of these, but you can look at these anytime you want. So that was updated this week. What else did I update? Portfolios we covered. I will show you on the portfolios page. Oops, sorry, it's on the chart lists and scans page. I have these chart lists here that you can download anytime you want. These have been updated too. So relative outperformers explains what this scan does right here. So these are outperforming both the S&P and their own peer group, outperforming their industry group by 10% or more, and the S&P by 7%. Has to satisfy both of those things over the last 3 months, and their technical performance is in the top tiers, in the top 60%. So this week there are 308. You can see there's more than last week. So that is bullish. The market continues to be bullish. So more stocks are outperforming their peer group. This is the short squeeze list. There's 51 this week. Last week there were 47. Mostly that's because I changed the parameters a little bit. I put out lowered average daily volume to 100,000 shares from 250, and I lowered the market cap to 100 million from 250 million. That only added like 4 stocks, but still 51 stocks in there. All of these are CSV files you can download into your own platform anytime that you want. And then I've got my own what I call Breakpoint watch lists, kind of like doing what IBD does and lots of others, creating a top 50 list. So I've got this is the scan that actually shows you what it will do, and these are the stocks that are in that scan. Also, what I did is updated these. So these are my favorite chart styles. I'll show you that here in a minute. So these that are highlighted over here, I updated these, just did these this morning. So all of these lists, I took one list out and I moved most of these up and actually added one here in the middle, which is a monthly chart. So now I've got daily, weekly, monthly side by side. And I dropped one of the other ones, the number 12, I dropped out of the list. So I moved all the rest of these down. That's why these are highlighted, because the numbering now is a little bit different. But everything that's highlighted over here was just updated. So you can always go in if you want to create your own list, your own favorites list in stock charts. That's the way you can do it. So you can see over here, here's 1 through 12. These are the lists. So you can see number 10 that I have highlighted right now is the Keltner channels. This is my default view right here. It's basically just a simple candle chart with coloring. So the green is when the 21 is above the 50, and the red over here is when the 21 is below the 50. So of course, if I want to be long, I would like for it to be green naturally. So that's that one. I just updated that one. Here's number 2 is Keltner channels at the top and candles at the bottom. So you can look at both of those side by side to see what they're doing. What I like to do with this is my scan, which I will also show you in a minute, looks for stocks that have a green bar, but 2 and 3 days ago, it did not have a green bar. Number 3 is, this is not going to work too well. Let me do this with UNH. So this is a relative chart. So it shows you what relative to its own peer group. So you can see United is underperforming its peer group, shows you versus the S&P. It's underperforming the S&P. This is why these didn't show up when I was showing you an S&P chart, because it can't compare itself to itself. And then down here is its peer group to the S&P, which is also underperforming. So all 3 of these things are underperforming. Here's UNH right over here. We can look at this on the default chart right here. As you know, I have been doing covered calls on this. I had a covered call at 315, went way up here to 328, I think. And then the next day came back down below 315, and my covered call expired worthless. So I kept the stock and I kept the premium. So now I can do it again. Probably Monday, I'll look at it and see what the market's doing, and see if I will sell another covered call and keep moving my basis keeps going lower. Right now, my basis is down here around 284, I think, right down around here. So every time I do this, I get about $1.50 or $2 on a weekly basis. So it expires every week. Make $1.50 to $2 every week times 200 shares is what I own. So about $400 or $500 every week. And I keep the stock. And I just keep doing that over and over. Now, the dividend on United Healthcare is $2.20, but that is once a quarter. So you get $2.20 once a quarter, and I get $2 every week. So this just amps up my return. It's really great on dividend stocks like this, especially one that's just going sideways, because it's very easy to do a covered call. You rarely will get taken out. So that's nice. All right, what else? So that's United Healthcare. I added, I was showing you the, so number 3, number 4 is just a daily chart of a whole year. That's if I want to just get a bigger picture of what's going on. Again, United Healthcare. Number 5 is a weekly chart the same way. So there's the weekly. You can notice what happened. Big, huge shooting star. So could continue to go down. The number 6, which I just added, is a monthly chart. So now I can do daily, weekly, monthly, side by side. You can see what the monthly looks like. This one here is the IBD. I basically duplicated IBD's chart. So it looks exactly the same as what IBD does, except for I added a MACD. This down here is the relative strength that IBD uses. It's nothing more than comparing the stock to the S&P. Then I added a, down here, accumulation distribution and a technical ranking. So accumulation distribution is this red one. You can see it is being accumulated. After it hit this low right here, it's just been going sideways, but the accumulation distribution line is moving up. I put this moving average line in here just to give me a visual representation to see that it's moving up. So it's being accumulated as it's moving sideways down here. I said before, this is in a very long squeeze, that at some point it's going to explode. I thought that point was last week. I thought that was beginning, but the very next day it gave it all back. So it's not ready yet. And this is the technical ranking. But this basically is pretty much duplicates the way IBD does their charts. Number 8 right here is a relative strength chart, takes relative strength a couple of more levels down, shows the sector versus the S&P. So this is healthcare versus the S&P. It is underperforming, and the industry group versus its sector. So industry group versus the healthcare sector is also underperforming. So for United Healthcare, it's below 0 in every single category. It's underperforming everything. Number 9 is a 10-minute chart. So if I just want to look during the day to see what's happening during the day, there's what the 10-minute chart looks like. And over here shows you the volume by price. So how much volume is there at each price level? You can see this price level it's at right now has the most volume, which means that's where most of the orders are. Number 10 is a Keltner channel. So give you a little bit closer in view of the Keltner channel, which I explained before. Number 12 is John Carter squeeze. This is basically how he does his squeeze. This is the way he created it using charts, and he put it in his book, and I duplicated it before he actually came out with a squeeze indicator. He now has a squeeze indicator that makes it much simpler, but this is what it actually looks like. So anytime you see this bright green right here on John Carter's squeeze chart, that basically just means red dots down at the bottom. So it's the Bollinger Bands pulling inside of the Keltner channels. It's pretty simple. So whenever you get a bright green like we do right here, that would give a red bar down below. And then the last one is just simply a moving average squeeze chart. I just like to look at this sometimes just to get a visual of what's going on. You can see right now the 200-day is at the top, way up here, and all the moving averages are below it. So this is extremely negative. What you really want is the reverse. You want all the moving averages up above. But right now, this is very negative, although the 5-day right now is just kind of going sideways. So this is the point where it might start to move up. You can see it's got to just mentally draw a trend line up across the bottom right there. And here's the squeeze. You can see the squeeze down here. Very, very, very tight right now. So that's United Healthcare. All right, so those are all on there on this page. You can click on any one of these. So if I click on default right there, it will show you my default chart. And then you can save it right here, either set as default, or you can go down here, click on this little button, says save chart style, and you can save it as a new. You can give it a name. You can say, it's already going to be your default, but if it's number 2 on your list, you can say number 2 and give it a name. Give it the same name that I have if you want to, or you can create your own. You don't have to use mine. You can create your own as well, but these are the ones that I like to use because I like to look at them all the time, and it makes it very easy and simple for me to just jump back and forth to look at things from different perspectives. So that's that. Credit spreads. Here's a chart that I had somebody ask about credit spreads, and I've figured out a way in stock charts to actually do it. So here is my credit spread chart. So this shows high yield credit spreads in the top and corporate credit spreads in the bottom. And I put the S&P behind it. So, and I also drew the lines of where the peaks and valleys were. So whenever there is a peak in credit spreads, when credit spreads go really high, that usually is the bottom for the market. And when they get very low down here, that a lot of times is the top for the market. So this one should be green, actually. The ones at the high should be green. I'm going to change that. So this one right here should be green. All right. That will now show up green. All right. So the peaks are where the market bottoms. So they're green. Here's a little peak right here, market bottomed. It's pretty much the same for both of these. It's a little bit different for the corporates, but the line goes down all the way for all of them, so you can see it across all of them. So if we just look at this right here, here's a peak right here. So that was the bottom. This was in last June. So here's July, the middle of July. That's Christmas in July, this period right here. So you can see right there, middle of July, market went down, had a big sell-off. We might get that again this year. Don't know when it's going to start. Could be next week, could be the week after, who knows. But we can watch. Interestingly, the credit spreads are not moving up. So over here in the middle of July, so this is July, the beginning of July, where we are right now, right there. That's what the credit spreads look like. Here's what they look like now. The market is continuing to go higher. Credit spreads are coming down. So that implies it's going to continue to go up. However, whenever it starts to roll over, the credit spreads lag the actual peak. You'll notice that. So the bottom for this, where the red line is over here, but the peak was back here. So it's lagging it by about 2 weeks, or a week at least. So keep that in mind as well. So this is not going to tell you in advance that the market is rolling over. The market will roll over first, and then this will confirm it. In this particular case, I like the finding the bottoms better with this. So here's a peak right here, green line, there's the bottom. So in this case, it actually happened a little bit earlier. Here's a peak right here, was the exact same day as the bottom. Here's a peak, and the bottom was right there. Here's a peak right there, and that's where the bottom was. So this is a pretty interesting one. This is for credit spreads. You can take a look at this to see. I would actually recommend looking at this every day for the next couple of weeks, because we don't know when that rollover is going to happen, but it will happen. And I put it up here near the bottom finder charts, because that's kind of what the use of it is. So if I look at the bottom finder, actually, let me go back to NASDAQ. Look at the bottom finder for the NASDAQ 100. And you can see down here where percentage of stocks above the 20-day right here, it was actually 0. So really good chart for finding bottoms. Doesn't do as well for finding tops, because tops can last for quite a while. So we're at a top right now, and this is beginning to get toppy looking, but it's not really quite there yet. It's not quite at the high that it was before. There's the previous high right there. So not quite there yet. And then I can put another one on the 50-day. There's the high, not quite there yet. Although the 200 is higher. So the 200 is up to 75% of stocks are above their 200-day moving average. That is very toppy looking. So 85% for stocks above their 20, 83% for 50, 75% for 200. That is very, very top heavy. Again, it can stay there for a while, but it is, I would not be taking any new positions right now. That's what I'll tell you. This is the area where retail traders think that the market will go up forever. It's hitting new highs, and it keeps hitting new highs day after day after day. And they think this is the time that they should get in because everyone's making money, but I'm not. And that's the time when it will roll over. So just be very careful about that. You can also look at the put-call ratio to get an idea of sentiment. Look at the 5-day moving average of the put-call ratio. You can see now it is in top territory. So again, when this gets down here below 52, that means everyone is bullish, and that doesn't last very long. So when everybody is bullish, that's usually when the tops happen. Again, it doesn't mean it's going to happen right away. It doesn't mean it's going to happen Monday. We might get another week. It's Christmas in April after all. But all of the signs are there. All of the topping signs are there. So I just would not be taking any new positions, frankly, right now. I wouldn't be shorting either, by the way. So I just step aside, move up your stops, generate some cash by selling stocks that you have profits on. In fact, this probably would be a really good time to take profits. This is the time when Wall Street takes profits, when the market is climbing higher like this at that particular rate. That's the time when Wall Street takes profits and retail traders are trying to get in. So don't follow the retail traders, follow Wall Street and start taking profits. Raise some cash for when this drop does happen at some point. And there will be a drop at some point. All right, what else? Anything else? Credit spreads, I did. Commodities, I think I did everything I wanted to show you. All right, for those that are interested, I know there was one more thing. I wanted to show you a scan. So I want to show you the new scan that I created. I actually made a little twist to it, and we'll run that in a second. So this is like I call my momentum watch list scan. So this is the one that builds the watch list. So I use last week's watch list, or at least the last time I ran it. So I plan to run it once a week. I haven't put this on the website yet, but I probably will. So here's last week's watch list. And then I am looking for top 10 stocks. Let me put this down here so I can find it. So here's what I'm looking for. These are the top 10 relative outperformers. These are updated every week. Top 10 stocks that have beat earnings and revenues. And this is the top 10 IBD 50. And if you do nothing else but just go in here and take a look at the ones that have asterisks, those are the ones that are new to the list that have just been added. This one here, Symbiotic, is one that a subscriber asked about. You can click on any one of these new ones, and what you'll see is these all look very similar. They're all pretty much near the top of their run. And you would expect that because they're in the top 10. So Symbiotic looks really good. Here's SMR, New Scale Power, just made the list. It's actually rolling over. So maybe this is a time to start taking a position in it. Nothing new in the earning, and nothing was removed right there. So these are the ones that fell out. You notice Roblox came out of the relative outperformers this week. Does not mean it's a bad stock, just means that it's not in the top 10. So see, it pulled back a little bit, so that dropped it out of the top 10, but now it might be heading higher again. So these are all really good stocks. Here's the IBD. There's Symbiotic. Palantir made it back into the top 10. And down here we have the top 10 large cap. We have two new ones, Citigroup and Goldman Sachs. Over here are the top 10 mid caps. There are no new ones this week. HIMS is still in there. And the top 10 small caps over here. Interestingly, the only new one this week is Solar Edge, and it entered the list at number 4. So had a pretty strong run. So there's the run. Again, this is what all of these look like. They're in the top 10 for a reason, because they are all having a really good run. Doesn't mean that's a good time to buy them. It's certainly a good time to put them in a watch list. So what I do, and that's the reason I showed you that. So what I do is I run this watch list. So I'm pulling all the top 10 for this week, strong earnings, top 10 relative outperformers, top 10 large, mid, and small caps. I don't need the top 10 IBD 50 because I have all of the IBD 50 down here as one of the lists. The top 25 stock twits, and this is all three of their lists. So this is the combination of the S&P, NASDAQ, and Russell 2000. So it's a combination of all of the stock twits list. And then the Magnificent Seven Plus, which is really all of the large cap tech stocks, which usually are momentum trades, and I want volume more than 100,000. So that's what I run once a week to create the list. So if I click on run, what I get was 160 stocks. Now, the next thing that I do is I created two other watch lists, and I showed you this one last week, but I've modified it a little bit. So in this one, bullish one, which I also modified it slightly, this is just looking for a momentum bar that's green, and it did say the last 3 days is not green. But what I did was I noticed that sometimes the day before is green too. So I basically put slashes that will tell it to ignore that line. So I took that particular line out. So now I'm only looking for today it's green, 2 days ago it was not green, 3 days ago it was not green. And that will then give me a list of stocks that are starting to move up, including ones that have already run higher. So if I run that scan, it gives me 27 stocks. So these are stocks that are already running. They've had a little bit of a pullback, at least 3 days worth of a pullback, and they're starting to move up now with momentum. DJT, Trump Media is on here, CoreWeave. So usually a lot of really good stocks on this list. The modification I made a little bit on this is to also say, not only do I want a green bar, but I also want it to be closing, have the high today above the 21 and yesterday's low below the 21. So that means these are stocks that are just moving up above the 21. So it's not going to catch all the ones that have already made the run and are just having a slight pullback. It's going to catch the ones that are just beginning to have a run. And this is going to be an amazing scan once we get a big pullback. I actually went back and back tested this. First, let me run it for today. Show you what today gives me. So 14 stocks. There's just 14 stocks on it today. There's a list. You can screenshot that if you want, but that's the list going into Monday. But I back tested this, I think 58 days ago, which would have been April 9th. That would have been the bottom after the big sell-off from February. And let's see what we got. If I had run the scan, if I had the scan and run it on that day, now I have 76 stocks. You can see how many stocks are recovering and starting to move higher now. We can just take a look at a couple of these. Here's DraftKings. So this was back here. It would have been April the 9th, right here. April 9th, so that would have been this bar right here. Yes, it went sideways for a while, but if you had bought this day or the next day, put your stop right down here somewhere, probably down, even give it more room, put it down there until it starts moving up and then move it up to the low. So that's DraftKings. What else? Celsius Holdings. So April 9th right there. So that's where it was right there. So it moved sideways and then started moving higher. Let's see, Coinbase. See what it looked like on April the 9th. April 9th is right here. So that was it right there. Interestingly, look at this on this one. So there's the green bar that I'm looking for. Remember, I was looking for a high above the 21 and just barely did it, and a low the previous day below the 21. So it satisfies both of those, and it satisfies the green bar. Just barely, by the way. But that was a great entry point. this is going to be an unbelievable scan once we have another big sell-off, which I am chopping at the bit for a big sell-off. But no telling when that's going to happen. But you can see from there, very low risk. You could have put the stop way down here at 142. The bought it the next day at the open at 168. Never had the stop taken out. Today it's at 355, so almost a double on Coinbase. Just using that scan. Now the scan's going to find it other times as well. So this one would have qualified. So this is after it's already running up. So a green bar, 3 red bars. The high is above the 21, and the low yesterday was below the 21. So you could have got in right there, and it ran up. That would have hit the scan. This one would have hit the scan back here. So actually, there's only 2 that would have hit it during this big run up after this bottom right here. So that's what that scan looks like. So I think it's going to be a really, really good one. For those, I showed it so you can take a picture. For those that have stock charts, you can create it yourself. So that's what the momentum scan Bull Plus looks like, and this is what just the momentum scan without the 21-day in there. And then this is what the momentum scan itself that bills the watch list. So I'm using all of these things. So you kind of have to watch the website to see what these top 10s are, and then put them in your own watch list. So yours is going to have a different name than these. And then I use last week's watch list, so I can just keep building on the last week. So that's the way that works. All right. Anyway, today is July the 4th, Independence Day. Had plenty of time today, so I just thought I'd do a little video, probably longer than I expected, or that maybe you even wanted. And maybe nobody's going to even watch it because it's 4th of July, which is fine. But anyway, it's the unstoppable bull. Just keeps on heading higher, will not stop. It's going to the moon, going to 7,000. We're in a secular bull market, which is continuing. We've got 4 or 5 years left for that to run. So we'll see. It will at some point have a pullback. I don't know when that will be, but it never goes up forever. But right now it looks like it's unstoppable. So we'll see what happens. Do your research over the weekend. Those that have a subscription to the website, there's lots of places there that you can take a look at, research. A lot of good lists that you can download on the website. Another one on the charts, actually on the options page, are stocks that all have weekly options. So these are right here. This is top weekly option stocks, top performer. These are all the stocks with weekly options. So if you just click on this button right here, it will then download it up here to your download file. You'll download it as a CSV file, and which would look like this. And then you can import that into your own platform. So you'll have all the stocks that have weekly options. If you like to trade options, that's a really good list to use. All right, thanks everyone for watching. Have a great 4th of July weekend. Hopefully somebody will watch this. If you do, please like, subscribe, send me a comment. Let me know if you'd like me to look at anything. I'd be happy to do that next week. And have a great weekend. Take care.